The S&P 500 hit a 2015 high on Thursday, and the rally is set to continue on Friday. This as geopolitical pressures in Ukraine ease, and a ceasefire with Russia is set to take effect on Saturday. Meanwhile, officials in Greece are working towards a debt deal, and numbers released Friday morning showed Eurozone GDP rose 0.3% during fourth quarter. So what does this all mean for investors? Let's bring in Michael Hewson, Chief Market Analyst with CMC Markets, joining us from London. And Michael, Germany was the real bright spot in this morning's GDP report, showing a 0.7% increase during fourth quarter. How significant is Germany's rebound?
I think it's very significant, and I think what's more significant is it's actually been driven by domestic consumption, retail sales, consumer spending. And I think a large part of it is down to the recent fall in oil prices. It's put more money in consumers' pockets. Generally, German consumers tend to be rather conservative with a small c. And what we've seen over the past quarter is that they've started to spend some money. And actually, some of the economic data that we've been seeing coming out of Germany has already started to turn around. And actually, in Q1, we actually could see a particularly good quarter there as well.
All right, let's talk about the rest of Europe, especially Greece. How will the Greece debt situation play out in your view? Will a deal be reached?
I think that's the million-dollar question, Scott. And I think at the moment it's too early to say. Jean-Claude Juncker came out about half an hour ago and basically said that the two sides, Greece and the EU, remain quite far apart. And as a result, we've seen European markets actually come off their highest levels of the day. The DAX did briefly go above 11,000. It's actually come back off that level now. I think, it would be unambiguously bad, I think, if we didn't come to some form of arrangement. I think the main focus will be on Monday's Eurogroup meeting. It will be in the afternoon. There's an awful lot of, there's a massive chasm that these two parties need to bridge. And unfortunately, they're very, very entrenched in terms of their respective positions. So I'm not overly optimistic at this early stage.
All right, now Greece has expressed interest in staying in the Eurozone, but if they are shown the door, is that the end of the Euro?
I believe so, yes, because what it would mean is that the euro is not irreversible. And I think that's an outcome that both parties need to avoid at all costs. There is this misguided view, I think, in Germany that Greece would be, it would be in their interest to push Greece out of the euro. I would caution against that, because I think if Greece leaves the euro, it opens the door for a potential breakup of the euro.
All right, Michael Hewson, Chief Market Analyst with CMC Markets, joining us from London. Michael, thank you.
Thank you.
I'm Scott Gamm, and you're watching The Street.